Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, I'm Tony Dom Jiaching. Now, let's begin tonight's Q&A Good Night session. First, let's take a look at the two topics for today. The first one is about the new normal and the confrontation with this so-called DACO. Clicking on this is a rather strange title, and you might be wondering what exactly we're talking about. Of course, we'll also look at a comparison between tech stocks and turnaround stocks. What I want to mention is that yesterday I saw two reports on Bloomberg. One of them is clearly bullish, saying that this is the new normal. The other one serves more as a warning, reminding everyone that right now we're basically at a high point at the top. It's like playing on the mountaintop. You need to be careful, and you need some real skills to make money. So, why is it worth sharing this with everyone? Of course, it's because it offers a different perspective on U.S. tech stocks, bringing up some alternative viewpoints. First, let's take a look at the current valuation of the S&P Wink with Tongue Sticking Out Tech Index, which is actually already on the high side. The strategist team at Bank of America says that, yes, it does look high right now, but they believe this elevated level might actually be reasonable and could stay this way for a while. Also, they don't think this high valuation is what you would call a bubble. According to them, they're using their own set of 20 internal tracking indicators. Out of those, 19 indicators suggest that the market is somewhat expensive, and among those 19, 4 have even hit all-time highs. However, he did point out that there are some characteristics, such as lower financial leverage, smaller earnings volatility, higher efficiency, and more stable profit margins. These are all positive factors that justify higher valuations. But on the other hand, as we'll discuss in a moment, there are always concerns in the market, especially among more experienced investors, those who went through the tech bubble in 2000. They can't help but think about whether the current situation is similar to what happened back then, like during the dot-com bubble era. So, the market is quite alert to this possibility. On the other hand, there's a contrasting report that echoes what we just mentioned. It points out, and I think this part is actually true, that if we look at the tech sector, the areas with the highest valuations are like standing on a dangerous peak. It's a precarious situation. So what is the main area we're talking about here? Actually, it's UBS Group. They conducted a study by tracking two technology stock subindices. One is the so-called unprofitable tech stocks, meaning tech companies that aren't making a profit. The other is the so-called profitable tech stocks, which are tech companies that are making money. They looked at the performance from the end of July and into August. Since the end of July, unprofitable tech stocks have risen by 22%, while the profitable ones have only gone up by 2.5%. Let's talk about this a bit. Actually, let's bring it up and look at this chart. The lighter green part represents the so-called unprofitable segment. You can see that after August, this part as a whole shows a difference in performance overall. Actually, the gap has widened a lot, and one of the main reasons driving this widening is that the jobs report at the time was pretty bad, which boosted expectations for interest rate cuts and in turn drove this performance. We need to understand that unprofitable tech stocks are actually more sensitive to rate cuts than profitable ones, so we need to pay attention here because this is an overbought situation. Now, what happens after an overbought rally? It might not immediately turn bearish. What we need to watch for is that you might see some volatility, but in most cases, theoretically, the difference between the two shouldn't be too large. There can be reasonable differences, and sometimes one leads the other, but since they're all tech stocks, in theory, the gap shouldn't be too big. Similarly, we'll soon look at the concept of tech stocks versus turnaround stocks. What we're seeing now, and what might be troubling everyone, is how to deal with stocks that have gone up a lot. Then, when you look at research reports, they tend to be more comprehensive and, in the end, give you two different perspectives. One says the stock price valuation is high and calls it the new normal. The other perspective warns you to be careful about bleeding on the knife's edge. In other words, this is extremely risky. So, how do you view these opposing opinions? Basically, when you see some market reports that are overly optimistic or overly pessimistic, what kind of attitude should you have? What I want to share here is, first, please stay calm. When you're holding a long position and you see a lot of bullish reports, you shouldn't blindly believe them. Start questioning, what is the purpose behind this report? On the other hand, always be cautious. The older you get in this business, the more careful you become. The point here is to remind you to always stay alert to the overall environment, never get too complacent. Usually, problems arise from carelessness and neglect, which is why issues tend to crop up. Finally, I want to emphasize the importance of fundamentals. Why? Because investing in stocks is different from speculation. With investing, you look for profits and decide whether to follow. With speculation, you might just jump into companies with no profits, and they might surge more aggressively. But there's still a challenge. When expectations are high, there's pressure to actually deliver profits. In the past, we've seen this happen with all kinds of startups, regardless of the type. Whether it's a tech company, IC design, or new pharmaceuticals, why do I suddenly bring up pharmaceuticals? If we talk about IC design or new technology, these are considered tech stocks. But on the flip side, for example, pharmaceutical companies developing new drugs, that's also a form of innovation. Here, it's industrial development, but with new drug development, it's the same. Once you succeed, you can expect to enjoy high, exclusive profits. Then, huge profits can be made, but the R and amp winking and laughing process is also extremely tough. From our perspective, when pursuing new drugs, like the popular weight loss drugs of last year and the year before, the current challenge is to verify their clinical trial success. This is the risk you bear when investing. To sum it up, first, when a report looks too good or too bad, stay calm. Second, approach any report with caution. Third, for stocks, pay attention to fundamentals. There are things to look at, so don't be blind or impulsive. That's the first part we wanted to share. Second, today we have quite a lot of information to share with everyone. First, we saw that the Atlanta and Richmond Federal Reserve Banks, along with Duke University's Business School, conducted a study. A survey found that the optimism among CFOs of American companies increased in the third quarter. The reason for this rise is that the uncertainty surrounding previous trade policies has gradually started to fade because the reciprocal relationship. Taxes and related measures have been implemented. Although some could later be canceled due to being unconstitutional or illegal, or even result in tax refunds, this uncertainty has significantly diminished. That's why their optimism is higher. However, he still issued a warning here that import tariffs could still drive up costs and may become more apparent or accelerate next year. This means the impact might not show up until next year, so we need to pay special attention to this. The main reason is that this year, there may still be relatively low-priced inventory available for sale, so that's something to watch out for. Another thing that the Federal Reserve and most officials are watching right now is whether this so-called tariff pass-through is a one-time event or if it will be ongoing. If it's a one-time event, then prices will gradually ease later on. At least, the price index will show a slowdown, even if it doesn't feel that way to you personally. This part here is a report from the Federal Reserve. In addition, we also saw that 2 Federal Reserve officials spoke yesterday. Chicago Fed's Goolsbee seemed to have been interviewed unexpectedly, and he basically said that in his future voting strategy, he might not be willing to support a rate cut by the FOMC. His stance, as I mentioned, is relatively hawkish. However, Mary Daly's comments were more dovish. But we should out one more thing. If you look at Chinese media, they might only report the first part, that she only said there is a need for further action. But the latter part of her statement might not be translated or included. So when we look at sources, we usually prefer to check Bloomberg, because at least in principle, the translations are relatively complete. Looking at this, of course, the most important thing is to compare the translations. Usually, when one person speaks, different media outlets translate it differently, so you really have to dig a bit deeper to understand what they actually mean. We're going to talk about something he mentioned. First, that the central bank should proceed cautiously when implementing rate cuts. In other words, while further rate cuts are possible, he hopes they will be done cautiously. The basis of this speech is that yes, rate cuts can happen, but please don't cut by 50 basis points or make any drastic moves all at once. Let's cut rates step by step, carefully, and observe as we go. This is basically Mary Daly's perspective. As for Goolsbee, he said he still wants to be very cautious. He doesn't necessarily think a rate cut is needed next time, but he believes the expectation for a 25 basis point cut is becoming more likely. The key is that inflation doesn't rebound, and as long as it stays on the lower side, that's good enough. Additionally, Bessent spoke yesterday, and he was a bit odd. He brought up the mess Biden made of the economy. Personally, I think the real mess is on the fiscal side, not so much with economic growth. He also said that the Fed should cut rates by 1% before the end of the year. Realistically, I think after a 0.25% cut, there could be 2 more cuts of 0.25% each, totaling 0.75%. A full 1% cut is only likely if we somehow replicate Milan 13 times over. If everyone is replaced by Milan, maybe then we'd see a cut of more than 1%. But he did mention easing the nationwide housing crisis and improving overall purchasing power. We'll see in a moment that new home sales numbers have actually gone up, which is why Trump has always been unhappy with Powell. He keeps pushing for rate cuts. From the perspective of real estate developers, what he's saying isn't wrong. But now, his current role is President of the United States. Additionally, regarding the Fed chair, he said, he has already interviewed 11 candidates for Fed chair, and then will submit the final list to Trump before the end of the year. So, as we can see, if the Fed chair is interviewed by the Treasury Secretary and then confirmed by Trump, it suggests that the status of the Fed chair probably won't be very high. Everyone can probably figure that out. Also, yesterday Betson mentioned again in the Liberty Times that 99% of the world's advanced chips are produced in Taiwan, so there are both strategic and economic risks. That's why they're moving some of the production capacity back to the US or to America's allies, like Japan or the Middle East. So, we've seen that in Japan, some people are trying to steal TSMC's 2nm technology. As for the Middle East, maybe not many people really want to go there. And when it comes to bringing it back to the US, now the visa issues are such a mess. So let me ask, does it mean that for an engineer's visa, I have to pay $100,000? First time applying or bringing an engineer over, must I give them $1 million gold card right away? Real issues. Contradictions in Trump's policies lie here. South Korea recently suspended its investment plans. Why? Visa issues need resolving. The U.S. lacks skilled or qualified workers, so how are we to help you build factories? Yet, you won't even let us use temporary solutions. If I bring in experienced people to help set things up and then teach you, you don't want that. You just want to do everything yourself and appeal directly, thinking you can handle it better on your own, that you can figure it out yourself. But I'm telling you, if my experienced workers come in and help you get things running smoothly, that would benefit you. But you don't want that either, so this is a contradiction. On another note, let's look at the macroeconomic data. Macro data we talked about yesterday was related to real estate. First, mortgage applications for real estate increased by 0.6%. Previous week, it surged by 30%. Why? Because there was a rate cut, and as soon as rates dropped, people started coming in. Another figure, building permits, which decreased. Preliminary value 1.311, 1.32 million units, and after adjustment, the final number is 1.331 million units. So, there was an upward revision, but compared to before, it's still a 2.3% decrease, which is also the lowest level since May. However, this is just the median figure. The main thing is to look at this together with the new housing starts data. What's more important is that yesterday's new single-family home sales grew by 20.5%, with an annualized rate reaching 800,000 units. This is the fastest pace since early 2022 for new homes. The main reason for this growth in new home sales is that builders are willing to cut prices, offer discounts, and launch sales incentives. For example, they might throw in a garage with the main building, or maybe a balcony or some kind of interior decoration as a bonus. There could also be incentives like upgrading your bathroom fixtures. These kinds of perks have helped boost new home sales. That pretty much covers the macroeconomic data from yesterday. Next, I have some news to share with everyone, and I'll just briefly talk about their impact. First, there's a forecast that electricity prices in the U.S. will rise sharply this winter, so that's something to keep an eye on. It's expected that electricity prices will go up. The West is expected to rise by 18%, the South will surge by 21.4%, the Midwest by 19.7%, and the Northeast will spike by 7.2%. There are a few reasons for this. First, energy prices, possibly fuel prices, might be a bit lower but still tight. But most importantly, we want to remind everyone that the main issue is that the U.S. could be facing a harsh winter this year. The winter is forecasted to be colder than usual. I had already seen similar predictions before, and now more and more reports are coming out confirming this. This will lead to increased demand for heating, which will keep oil prices relatively strong. There's also something else to pay attention to, which is related to Taiwan. If the U.S. experiences a harsh winter, this winter will be colder. Why? Because Lunar New Year falls in February. Generally, when Lunar New Year is in February, winter lasts longer and temperatures are lower, making it colder. If the temperatures are lower, then winter is usually shorter and much warmer in the hospital. But here, we can see that this is still related to what we call investment. So, when it comes to oil prices, everyone should pay attention to that. In addition, there's also a connection to heating demand. As for related clothing or apparel, the substitution effect is not as obvious, so we might as well focus our ideas on things related to energy. There's also another one, Freeport, which is Freeport-McMoRan, or FCX. Yesterday, it was mentioned that its pre-market drop was quite significant. Of course, the situation that came out afterward was indeed pretty bad. It was confirmed that there was an accident at a Graberg site in Indonesia. The disaster was really severe, so severe that it triggered what's called a force majeure in their contracts, meaning they consider this a natural disaster that caused the contract to be interrupted. This mine is the world's second largest copper mine, and it accounts for 30% of Freeport's copper production and 70% of its gold production. Globally, it supplies about 3.2% of the copper market. After this supply was cut off, let's first talk about the impact on copper prices. It was huge. Last night, London Copper and some copper-related stocks in the Taiwan stock market performed very well today, because this kind of thing is basically an unexpected windfall. Although when we were discussing internally, my colleagues and I had noticed a few days ago that oil and copper prices seemed a bit odd, like they were about to spike. But it turned out to be a copper mine disaster, which is just an unexpected, almost fateful event, so the price increase was quite significant. We need to pay attention to the fact that it looks like, according to the 3.4 report, the recovery time for this copper mine might be quite prolonged. Another thing is that this is happening in Indonesia, and the relationship between Indonesia and the United States isn't exactly smooth sailing. I can only say it's not all smooth, because Indonesia later imposed a 19% tariff. So, will the Indonesian government take this opportunity, not to say take advantage, but maybe use it as leverage in negotiations? That's something we'll have to keep an eye on. The investment return dropped by 3.2%. For copper miners, that's really great news, and it's also great news for copper prices. However, because this mining disaster was so severe, Freeport stock actually dropped more yesterday, by about 16%. In addition, there were reports that today, Trump might sign the TikTok agreement. In other news, there's a pretty interesting story. The G7 and the EU are looking to set a lower limit for rare earths, and they want to impose a carbon tax on Chinese goods to spur investment in rare earths. This could mean that others might just refuse to sell to you, and it doesn't matter how you set the price, since my marginal supply is limited anyway. You can set whatever price you want, but what's the point of the price? The recent actions of the G7 and the EU are honestly getting more and more genius. So let's just share a bit about that. Also, yesterday, Deutsche Bank released a report saying that AI-related spending is a key factor in the resilience of the U.S. economy. Without the boost from technology-related expenditures, the U.S. economy would probably already be close to a recession or even in one. For those of us who follow macroeconomics and the stock market more closely, this really isn't surprising. It's a situation that's pretty easy to understand. Because recently, this year's stock market has basically been driven by tech stocks, along with a handful of other stocks that can keep up. This is similarly reflected in investments. It's probably only the AI-related sectors that are really moving the economy, like those connected to G plus I, G plus G plus XJME. Which are the driving forces? So, this should have a significant impact on the U.S. economy. Also, there was news yesterday that made Intel's stock price very strong. Intel recently said that it approached Apple to seek funding support. After the Trump administration in the U.S. invested in Intel, Intel became like a gold medal beggar, first going to Jensen Huang to ask for help, and now trying to get something from Apple. I think as long as they don't come to TSMC to beg, we just wish them success. On another note, this news has affected European stocks today, because the Trump administration has started to impose import restrictions on robotics, industrial machinery, and medical equipment. As for industrial machinery, of course, you can think of precision machinery in this context. This sector has a bigger impact on Germany. As for medical equipment and medical stocks, countries like Switzerland, Germany, and the UK all have related companies in this field. So, this is more obvious. Europe is more significantly affected. Now, let's talk about robots. When it comes to Tesla, people often mention robots, which are becoming more and more interesting these days. Let me mention here that recently, Chinese robotic stocks have surged a lot. Our company's Hong Kong and Japan stock analysts had a discussion this afternoon, and they are very bullish on this sector. They said this is something they've already been recommending, not just something new. According to them, it's a sector they've already been sharing and recommending to investors as one to watch. This is something we should pay attention to. Now, both the US and China are starting to warm up in the robotics sector, and Trump has also launched an investigation into robots. I think next year, the US might also feel the pressure to catch up and release its own robotics products, so everyone should keep an eye on this. Robotics concept stocks might also start moving in the US next year, and the US will. If robotics concept stocks start moving, then our related stocks in Taiwan might also be affected and show some linkage. Another, less favorable, development is that the White House has asked federal agencies to draft a plan for large-scale layoffs during a potential U.S. government shutdown. This is quite unusual because typically, if the U.S. government shuts down due to a budget impasse, they usually try to resolve it within about 3 to 5 days, or at most 1 to 2 weeks, to get things back on track. In the past, this kind of approach was never taken, but this time the White House is actually asking federal agencies to start drafting layoff lists, which means it's possible that, as the government shuts down, they might be planning layoffs. This suggests they may not want to negotiate with Democrats. In other words, he's compromising less. It becomes, I'm cutting spending to meet your Democratic demands, so you have no argument. I'm willing to cut spending. So we need to look at the underlying implication here, which is that the U.S. government could actually shut down on October 1st. If that really happens, just like before, it will still be beneficial for gold prices. As for who else might benefit, probably not many. Right now, the only thing likely to perform well would be precious metals. All right. Yesterday, Oracle issued a corporate bond totaling $18 billion. The auction went pretty well. First, the subscription demand was about 4 times the offering. Second, the winning interest rate was lower than the guidance rate. So, it looks like the market was quite satisfied with the outcome. Now, let's talk about tech stocks and the so-called FANG turnaround stocks. To reiterate about tech stocks, we want to remind everyone once again that, in the short term, tech stocks have deviated quite a bit. Even from the perspective of the 20-day moving average, they're a bit stretched, meaning they're quite far from it. At this point, it's very possible, and worth mentioning again, that a pullback or some consolidation could happen. We need to watch for moving averages catching up. Why? Let's check the index and individual stock performance. It'll be clearer. The index only rose 0.24%, forming a doji candlestick. This doesn't signal a stop to decline. If things worsen today, it could indicate a continuation, increasing chances of the index dropping to test the monthly or even 50-day moving average. This is something to watch. Yesterday, I mentioned something. Micron released its earnings after the market closed on Wednesday, actually, after the market closed on Tuesday. After that, the next round of major U.S. corporate earnings reports will start around October 12th, when the financial sector begins to announce their results. If you're waiting for tech companies to release their earnings, that won't happen until the 3rd or 4th week of October. So, up until now, you can estimate there's about a 3-week window, an even longer gap than usual. You need to be careful during this window, because there won't be many positive catalysts. This is something to watch out for, especially for tech stocks in the near term. Combined with the fact that we've seen significant gains previously, you need to be cautious because the pressure for a pullback or correction is relatively high. Additionally, yesterday's response was at 0.82 during the session. The main point was that he addressed the details of investing in OpenAI, but the market doesn't have much capital right now, and people only know that the capital will be rented. The director responded about their own chips, but this continues to be questioned. There have been ongoing doubts, like whether you're self-funding or if there's some kind of collusion, and so on. I think this part is rather problematic. To resolve this, either NVIDIA, OpenAI, or Oracle needs to actually put real money in, or a new shareholder needs to step up and make a statement. Only then can this cycle be changed. Otherwise, I think these doubts will keep coming up, so this is something to watch out for. If NVIDIA doesn't take advantage of that big red candlestick from last Monday to move upward, and instead continues to move sideways, then things will get tougher. As long as NVIDIA isn't doing well, the entire tech sector will probably face greater pressure to adjust and sell off. As for Oracle, yesterday, Oracle actually performed pretty well, but the so-called Three Musketeers, NVIDIA, Oracle, and OpenAI, their partnership is being questioned, so Oracle is also under some pressure. Everyone should pay attention to the support level. It's best if it doesn't break, especially that round number threshold. Keep an eye on it. Now, Intel surged yesterday, and its performance was actually a bit like a rolling move. But honestly, this gold medal begging, I think the key point is, you can go out and beg, but what's more important is whether you can actually improve your own profitability. That's what really matters. Next, Broadcom. Broadcom is still moving sideways, but you can see it has tested the 20-day moving average, and there was some support. But let me tell you, unless you see at least one or more consecutive big green candlesticks, that's what really shows support. Otherwise, it's still a situation where it's too early to be certain. The candlestick range has been getting smaller these past few days, which means the market's conviction about the price isn't that strong. So let's keep an eye on this for now. Also, Micron announced its earnings on Wednesday and officially resumed trading on Thursday, dropping by 2.82%. The good news is that it left a lower shadow on the candlestick, but the bad news is, let's take a closer look in a bit. I paid special attention to it pre-market and it's still falling. Here, it's possible that the gap between the stock price and the monthly moving average is still too wide. We might have to wait until the moving average and the stock price get a bit closer before we see any clear movement. In addition, Google took a big hit yesterday, dropping 1.8%. This news isn't actually about Google. There's a bunch of English written here, and I want to explain it to everyone. Basically, the story I'm about to tell is that someone asked whether OpenAI will be the next Google or the next Ask Jeeves. As for Ask Jeeves, I actually experienced it back in the day during the tech bubble. The stock later became just Ask. It was also a search engine. So the question is whether it will be a hugely successful search engine like Google, or end up like Ask, which hardly anyone uses anymore. So with this search engine, Ask.com, people started to have doubts. What we're saying here is that people are gradually beginning to question these AI stocks. Let me share a perspective. Having doubts isn't necessarily a bad thing. If no one questions it and the price just keeps going up blindly, that's actually riskier. I'll say it again, having doubts isn't necessarily a bad thing. If it keeps going up without any questioning, that's actually a bigger problem. That's why, as we've seen, I keep saying that I'm watching OpenAI very closely. I'm really curious about what its next move will be. Why? Because right now, it's the most motivated and has the greatest need to find an operational platform as a new AI leader. So, what it does next is extremely important. If it succeeds, then American AI might develop in a way that actually looks successful. Microsoft. Yesterday's slight rise was still in the sideways range. It can't fall below the sideways range, otherwise support will turn into pressure. Facebook is in a similar situation, continuing to sideways. Its financial report will be released after the market closes on October 30th, which is about a month away. Facebook and Microsoft announced theirs on the same day, so the wait will be longer. Amazon also appeared to have a slight drop yesterday, but the problem is that if you only look at the drop without looking at the K-line, you might be taking it lightly. However, if you look at the K-line, not only is the position not good, but the size of the drop is also wrong. Be careful, there is still room for a correction. The good news is that the room for a correction may be relatively small, but if it falls again, it would not be surprising if there is a correction, because its trend is particularly weak and the upward trend has completely ended. It has been broken, so we should pay attention here. After reading this, we think we should remind you that the stocks that have performed well before, such as Google and Micron, have two large short-term deviations. The stocks that have performed less well have been trading sideways. The pressure may turn. If they fall below the support level, they will turn into pressure. So we want to remind everyone that there may be a risk of a correction in technology stocks in the short term. You should factor it into your assessment. Yesterday, Tesla rose sharply by 3.98, nearly 4%. The most important thing is that Wall Street analysts hold a positive view and expect that vehicles can be delivered in the third quarter and the delivery volume will increase. But I think I just mentioned robots. Chinese robots are very active. American robots. In fact, the first company that made robots was the American company Boston Domenica. In addition, the one making the loudest claims about building robots is Tesla. They are supposed to unveil theirs by the end of the year. They also plan to start small-scale production by the end of the year. This is very important for us. If Chinese robots start moving around energetically at the beginning of next year, the US can't afford to fall behind. We're paying close attention to a lot of things now. It's not that we love China so much or anything like that, but when the US is developing, you have to see what China is doing. The US-China rivalry could last another 10 or 20 years, so this is a show we have to keep watching. And in this kind of rivalry, whenever one side makes a move, the other has to respond. As long as it doesn't turn into a war, that's actually a good thing. Also, regarding Apple, that's another one. We talked about it on Monday. It's a comeback stock. On Tuesday and Wednesday, it went down, and the market is more concerned about the sales volume of the iPhone 17. More importantly, after it goes too high, it might pull back to test the neckline, so keep an eye on that. But I think, in the short term, the outlook should be relatively optimistic. Now, let's talk a bit about airline stocks. Personally, I expect they might be heading for a correction. You need to understand, since we're being more responsible here, let me tell you what you should be watching for. So you can shift your focus. Besides Apple, there's Tesla. It's made a comeback from rock bottom. Since Tesla didn't show signs of recovery, and after falling out with Trump, its stock took a beating. When they were messing with Dogecoin, they managed to offend a lot of people. Tesla has bounced back from the bottom. Apple is behind in AI development. Its performance has been lagging. It was only last week or this Monday that it finally started showing a positive annual return. There's also another one that used to perform pretty badly, but on Wednesday it went up another 1.18%. we need to look at its turnaround characteristics. This comeback from rock bottom is really strong. The main one is United Health. If you want to buy health insurance in the US, it's basically either United Health, Humana, HCA, or some other nonprofit like Blue Cross or a regional provider like Kaiser Permanente. These are the places where you get health insurance. Previously, there were 3 reasons for this. The first is there were accounting issues, problems with information security, the CEO was shot and killed, and then there was a miscalculation of insurance costs by the accountants, which caused the stock price to drop significantly. But you can see how impressive Buffett is. He went back and bought more, and you see, he bought at the low point, and now it's starting to rebound. So if you really want to look at stocks that are making a comeback from setbacks, this one is actually worth paying attention to. There's also another one, though it might not strictly fit the definition of a turnaround from rock bottom. It's just that it already has a bit of that flavor we're talking about. The one we want to mention is Home Depot. This is a supplier of building materials and equipment for home repairs and renovations. Most houses in the US are made of wood, so after they physically age, repairs are inevitable. You can only delay them, but you can't avoid them. So, the backlog of repair work is a rigid demand. It will eventually pick up again. That's why we should keep an eye on Home Depot. If you look at the left side, you'll see something yellow. What is that? That's a hand tool, a power drill. Besides drills, there are also many other things like lawn mowers and all sorts of equipment, all sold at Home Depot. So, if we're looking at a turnaround for Home Depot, Stanley Black & Amp Decker, which is known for hand and small tools, also has a chance to perform well. You can actually see that this is a pretty clear opportunity for a comeback, so it's something worth paying attention to. Another is defense stocks, Lockheed Martin or LOMA. In performance and contract volume, it's the #1 defense stock in the US. With the new fiscal year starting, new bids are about to be released. But because the US government might shut down, we need to pay attention. If the government shuts down, the release of these Department of Defense projects and bids will be delayed. However, even if delayed, they will still eventually happen. So, that's something we wanted to point out to everyone. There's also another one in the automotive sector. This one has also dipped a bit, but the concept remains the same. It's a supplier for auto repair and parts. You have to understand, Americans, it's like how people say Mongolians are a people on horseback. Americans are a people behind the steering wheel. Just like with housing, auto repair is a basic necessity. If you do not buy a new car, you have to fix your old one. That is just how it is with older cars. So, this sector has also performed fairly well recently, not bad at all so far this year. We want to remind everyone that for these kinds of essential, high-demand industries, once there is a turnaround, they tend to perform strongly. Also, let us take a look at the Philadelphia Semiconductor Index. Yesterday, the leader was Marvell. We have mentioned before that it is also an ASIC company, part of the second tier of ASIC firms. Then there is Intel, AMD, Qualcomm. Qualcomm was up 2.37%. ARM also rose by 2.35%. On the downside, Ultralab was the biggest decliner. I might cover that for you tomorrow. I'll look up some news about it, because this stock has been dropping really badly lately. I don't know what the issue is, but for the past 2 or 3 days, it's been one of the top decliners, with pretty significant drops. Credo is one of the bigger losers. Then, talking about Alibaba, now, when we talk about AI, why do I think it's not really a bubble yet? Because, as we've said, it's not just the US, look at China. Just yesterday, China announced plans to expand its AI cloud infrastructure. There was also news that they're going to work with NVIDIA on physical AI, meaning real-world AI. Actually, when we bring this up today, we'll talk more about robots, which is related to this concept. So-called physical AI is different from the software-based AI or other types of AI you usually see. This physical doesn't mean physics-based AI. It's not about learning physics or chemistry. It refers to real-world, tangible AI applications. If NVIDIA and Alibaba collaborate, it means NVIDIA has a chance to keep performing well in the Chinese market. Of course, there are security concerns, and I believe these issues are unavoidable between the US and China right now. But if they do cooperate, I think it's actually a positive development. Despite positive news, Alibaba's stock rise yesterday didn't boost the US market. Recently, Alibaba Cloud released 3 large AI language models, Qianwen, though I haven't used them. These include a multimodal AI, an open-source image model, and a paid speech model. China is making aggressive moves in this space. So, as I said, with China pushing forward, the US can't afford to slow down. Moving on. The Nasdaq has been down for 2 consecutive days, so attention is needed. The index is also a bit far from the moving average, so a return to the moving average is a very possible surprise. The S&P wink with tongue sticking out is in a similar situation. Volatility has actually come down, so there's still a chance the market could drop, just more gradually, more like a consolidation. Refer to yesterday's ups and downs. The equal weight index also went down yesterday. As for the Dow Jones, United Health actually went up, and Chevron also rose. That's really because some sectors have been performing recently. Disney was up, but on the downside, those that fell were mainly healthcare. 3M, this household goods company, was also relatively weak. Next, let's check the US dollar index, then check the market and answer questions. Per Professor Xinwu, the US economy may be slowing, so that's relatively strong. So the US dollar index rose yesterday but turned down today. Primarily, it seems to be moving sideways and bottoming out. For it to break out and start a rally is very difficult. Why? As rate cut expectations are still. So it likely won't be too strong, but the 2-year is doing relatively well. As yesterday, numerous companies were issuing bonds. The most famous, as mentioned, was Oracle's issuance. Others plan to issue as well, so this part has been pushed up day by day. Both the 2-year and 10-year yields have been lifted. As for oil prices, here's what happened. Yesterday, Russia made some statements, and Trump also made tough remarks toward Russia, so the overall attitude seems to have hardened again. It looks like the Russia-Ukraine war isn't ending anytime soon, so tensions are rising. The market is also worried that Russia's crude oil supply might be restricted, which is why prices went up quite a bit yesterday. It's already at $70. On Thursday, it dropped again, but from our perspective, yesterday it crossed the 200-day moving average. When it crosses this moving average, it might pull back. In theory, these kinds of surges are usually short-term. If you look at supply and demand, neither is strong. On the supply side, demand isn't as weak as people previously thought, but supply is even greater. We need to keep an eye on oil prices. I think it's going to stay within a range. From 65 to 70, if it breaks through, it's 70 to 75. To go higher, it's unlikely. Gold prices dropped yesterday waiting for data. The short-term moving average deviated too much, a tendency to revert to the moving average. Bitcoin continued to pull back yesterday, so pay attention. Actually, Ethereum had a big drop today. Ethereum has been relatively weak lately. We mentioned this on Monday, saying that there was a massive forced liquidation that made the whole market weaker. But we should add that this weakness will affect smaller cryptocurrencies, so you can see that. Don't just see that Bitcoin is still doing okay and ignore the rest, because it's possible that Ethereum or other coins like Tether have already dropped significantly. So everyone should pay attention to that. Now, what should we watch for tonight? First, EEA is going to release its annual revision report. Second, the median GDP should be announced, because it's the end of the third quarter, and usually at the end of the quarter, the previous quarter's second quarter median GDP will be released. Also, check the US goods trade data to see how imports are performing. Are people still rushing to buy goods? If not, will imports continue to increase? Then there are the durable goods orders, the number of people in the physiological business, biological sales, and the Kansas City Fed's manufacturing index. All of these are being released today. There are also a lot of Fed speeches today, including Mester, Goolsbee, Williams, Kansas City's Schmid, Bowman, Michael Barr, and Dallas's Logan. People like Daly are also speaking, because some officials have gone to Europe for meetings. We should especially mention that Fed officials, possibly from now until a new chair replaces Powell, might be more willing to express their own views. Of course, this could be somewhat tacitly approved by Powell himself, letting different voices be heard, so that Trump knows the Fed isn't something that Powell alone can decide. If you really want to be the one making all the decisions, then you have to do more work. You'll need to do a lot more to actually have control. That's something we should pay a bit of attention to. Now, let's talk about checking US stock futures in a moment. If this is the data from 5:30, I just took a quick look before the live stream, and honestly, it's not looking good. Let me say that up front, it's not good. So let's look at this data together. I said it's not good. Just now it was down 0.1 or 0.2, not even that much. But now, as you can see, the mini S&P is already down 0.5, and the mini Nasdaq is down 0.7. See, yeah, we're not just saying this. I actually felt something was off yesterday. Weird. After 2 days of decline, with some major component stocks not looking reassuring, the main issue is that after a long period of gains, there's now a short-term divergence from moving averages. Plus, there's a lull in earnings reports, so consolidation is likely. Please pay attention. Let me say it again. Let's take a look at the pre-market movements related to corporate earnings. CBRE, which is a diversified real estate company, and even real estate stocks in general, this one, Boker, is a real estate brokerage, basically a housing agent. Gains are strong. Why? Probably new home sales picking up, having a positive effect. IBM rebounded, but its situation is similar to Intel, which doesn't need a bailout. That's it for Intel. Gold medal, Gene Pi, continues to rise. Raymond James, if I recall, is also real estate related. Albin, I think, is chemicals or mining, also performing well. Freeport rebounded. It dropped too much past 3 days, so today's rebound isn't surprising. BG is Bunge, the big agricultural products company, not pesticides. That's different. It did go up, but since it has investments in Europe, the increase probably doesn't have much to do with the US. Also, Excel, this should be an energy company. It went up yesterday and continues to rise today. As for CNP, I forgot what they do. Let's take a look at O'Reilly. the auto stock, and see if, yes, as just mentioned, this one is going up again. AutoZone is another company, O'Reilly is also a different one, and there's another one called Pep Boys or something. Maybe we can help organize that information later. O'Reilly is another auto stock that's performing relatively well today because AutoZone recently released its earnings report, which should be pretty good. Also, Walmart is up as well. It seems like, according to the news here, Trump might have tried to pitch the F-35 to Turkey's Erdogan, trying to get him to buy the F-35s. The main reason is Israel. It's a bit risky, so they want him to buy. But as for Saudi Arabia, their experience is that even if you buy weapons from the US, they can just shut you out with a backdoor, so it's basically not that useful. Stocks going up, now let's look at those down. We still need to note declines. CarMax, a large used car dealer in the US, dropped. Then Jabil, announcing earnings. Gross margin in their AI or MIS division didn't meet expectations, so the drop is noticeable. Aurora continues to fall, Palantir is also down, and Seagate, very strong before. Seagate and Western Digital, WDC, are the only two major hard drive companies left in the US. The recent surge in their stock prices has been a bit over the top. I haven't brought up the surge because it's a turnaround stock, though it turned around earlier, and its rise has been excessive, so I didn't mention it. But today, it's down. Micron is also down, and importantly, 160 has been broken, which is worse. GE Supernova, its power division, is down. Coinbase is down too. Overall, more stocks are dropping today, and declines are steeper. Tesla, AMD, and Teradyne are also down. The market seems bearish, so everyone should pay more attention. The US dollar is strong, moving above the golden line. But after breaking above, it needs time to consolidate. As for US Treasury yields, why are they moving? It doesn't look good. The 10-year yield is climbing, and oil prices haven't moved. Gold prices, with yields up and the dollar strengthening, gold has come down. So today, we need to note that yields are rising strongly, which might not be good. This could put more pressure on tech stocks, so we should be cautious. Next, let's take a look at this. Let's look at Anaya. I told you, I really mean it. I need to find time to take my medicine today. I haven't taken my allergy medicine, so I really need to catch up on that. Why did essential needs like car and home repairs come in last? Is it because Americans have become wealthier? No, that's not it. It's not that they've become richer. Previously, due to tariffs and other uncertainties, people would put off repairs. For example, if you have a wooden house and your roof has issues, leaks or even a fire, and you don't have money, you can only patch it up and wait until you have funds to fix it properly. But can you just leave your roof unrepaired? No, you can't. If it keeps leaking, your whole house will rot. So, that's basically how it is. Right now, it's not that their economic situation is bad, but rather they simply can't hold out any longer. Those essential needs are gradually coming back. That's the point. So, if tech stocks are going to take a break, the sectors that might perform best and show results right away could be those with essential needs, because that's where the market value is showing up. That's why this sector is likely to attract buyers again, starting from a low base, so there's a chance for a rebound from the bottom. Let's take another look. There don't seem to be any new questions. If there aren't any new questions, then we'll wrap up here for today. Today, everyone should pay a bit more attention. As you can see, the pre-market decline hasn't changed. In fact, it's possible that the drop will intensify today. Judging from the performance of individual stocks, it's best to stay cautious. So, please keep an eye on things. Alright, that's it for today's live stream. See you all tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.